Stay with us here on World Insight with me, Tian Wei. Still to come on our program. China's foreign investment law to be updated. First time in 40 years. What can we expect? Will it help solve thorny trade issues? The answers right after this break. Welcome back. You're still watching World Insight with me, Tian Wei. More on China's annual political session. A draft of China's highly anticipated foreign investment law was submitted to the top legislature, the National People's Congress, for deliberation this afternoon. The new law will ease regulations of foreign investments in China. It seeks to protect investors' legitimate rights and improve the business environment. The law, in line with the 2 trillion yuan tax cuts mentioned in this year's government work report on Tuesday, are both crucial in keeping China's economy stable and healthy. In today's special series, Weigh In 2 Sessions, I sat down with Zhang Yichen, a CPPCC member, who's also the chairman and CEO of CITIC Capital. Mr. Zhang has decades of experience in foreign investment in China, as well as Chinese investment overseas. He shared with me his thoughts on the prospects of China's economy and certainly on the upcoming foreign investment law. Let's listen in. This year's government work report, the Chinese premier promised to reduce taxes and fees for enterprises all over the country. 2 trillion yuan, that's a gift package he's willing to give out on behalf of the country. But the question is, where does the money come from?
Well, basically it's going to come from mostly cutting government expenditure, which I think is no easy task, given there are many people employed, and the government, the Chinese government in general, handles many aspects of not just the economy, also the society. So shoulders a lot of burden. So I think it will be a tough task. However, the commitment seems to be there, and I think that will be having great stimulating effect to the economy.
Is there a lack of money, or is there a lack of confidence? Will the reduction of fees and taxes, which is mainly the thing that the government put out, be able to boost the confidence about the business environment in this country?
Well, China is going through a transitional period. Transitioning from a investment-driven economy to a consumption-driven economy, and at the same time, the economy has a very high level of leverage, and which needs to be worked off. So during this period, many companies need to find ways to upgrade themselves, and so there is a general sort of a confidence issue because simply because things are not so easy anymore. There is no lack of liquidity, as far as I can tell. I think the buoyant stock market in the last 2 months proves that there is ample liquidity. It's just people are so used to building up new capacity and producing more and than to ever expanding market.
It's all about going up and up and up.
Exactly. Yeah. So it's finally come to a point where things need to adjust, and people have to learn a way to upgrade their products and focus more on serving a more sort of a discerning consumer market.
Right. What about U.S.-China relations? As we all know, at the moment, negotiations are still going on. We do not know the result yet. Earlier, in some previous media report, you were expressing your concerns about this bilateral relations, which you regard as one of the most important. What about now? Is there more certainty to you at this stage about where the relationship is going, and therefore for the businesses to make your decisions?
Well, I think the current negotiations on trade will produce some results. I'm hoping, and I'm fairly confident. But I think a longer-term issues between two countries, in terms of how to view each other as a strategic partner or a strategic competitor, or even rivals, or possibly even enemies, and in the eyes of some of the most hawkish people in the U.S. government. I think that is a long-term issue that will be troubling the bilateral relationship for years to come.
Do you think things are getting a bit better, or it's even worse?
I think it's getting a bit better in the sense that at least good progress in terms of negotiation and between China and the U.S. and both sides clearly want a deal. I think that clearly alleviated some concerns, but the fundamental issues are not resolved. So that I think will take a much longer time.
What does that take to resolve it, do you think? Can China be able to, on behalf of itself, make efforts in what areas would that help both sides to come closer to one another, even for the mid and the long term?
Well, I think the current amendment to the investment law is a very good step, and showing the world that China is just as eager to protect intellectual properties, and China will forbid forced technology transfer to address, again, concerns from our side. And I think in terms of market access, we could do better in some ways, because I think fundamentally, if you look at it from central government perspective, I think the policies have always been clear. I think, but China is a huge country, and the situation varies from province to province, and there could be very well local protection. So these are the issues that China needs to address in order to assure the world China is open and China will reform more, and China will follow the international rules.
Some say, well, the current draft is so general. Others say, well, this is just the basic law, on basis of which there's likely to be more regulations and detailed laws at different levels. Do you subscribe to the latter explanation?
When China opened up first in 1979, that was one of the first laws they put in place.
Exactly.
In order to assure foreign investors that they can actually come into China and set up a joint ventures. So we certainly have come a long way from those days, and we'll continue to make improvements. And I think the fact that there is still over $130 billion FDI that came into China, and making China by far the most favorable destination among developing nations, I think that still says a lot.
Would there needs to be more government-driven, or this is more likely to be market-driven from now on?
I think it's going to be far more market-driven than before, and the government is committed to the so-called negative list rather than specific approvals. So I think that negative list will shrink in size, and over time, more and more sectors will be open completely to foreign capital.
But mergers and acquisitions overseas could still be quite a challenging topic, and probably even more of a challenge in the near future. Have you ever thought about that? I'm sure you think about that and think about the solutions every day.
That is true. However, I think we operate mostly in fairly mature sectors. I think most of the restrictions various countries put up are in the cutting-edge technology sectors. For example, one of the investments we made in the U.S. last year was buying a significant stake in a health supplement company called GNC.
Yes.
Which, as soon as we announced the deal, then the trade war came, and we thought, maybe the deal was dead, because given it was subject to CFIUS review, and because certain aspects of the business. However, but it was in September the approval came through, and so that shows.
Were you surprised?
Yes, we completed the deal. We're building up their China business now, so which shows, in this generally mutually beneficial economic relationship, there's still things that can be done, but I think for sure it will be more cautious.
But Mr. Zhang, I have to ask you this. I mean, we could be quite optimistic in terms of the near future business environment, for example, when these things are getting better. However, as you said, in the mid and the long term, whether it's geopolitics or it is about how technology is likely to transform the society and beyond, are all unknown issues. So for businesses, what is the best way, the philosophy that you can cling onto for now?
In the long run, given how huge the Chinese domestic market is going to be, we'll be even less reliant on the international market. So, like the government always says, just do your own work, and do your own things well, and things will take care of themselves. So all the issues, the current trade friction and all that, I think over time it will become less significant.
Finally, before we go, Mr. Zhang, some of the foreign observers, when listened to the government work report, one adjective they used to describe the general tone of it, sober. Obviously, that indicates the kind of challenges China likely to face for the near future. But the question really is, after the government work report recognizing the challenges and this year's meeting, for all of you CPPCC members and MPT's deputies to discuss them, will the country be able to come to certain kinds of consensus? Will the confidence come back further?
The three factors that contributed to the the decreasing confidence last year, I think first and foremost was deleveraging, and the deleveraging happened all at the same time in many different financial markets, and it was not as coordinated as the government hoped to be. So that was reflected in the government report. They did not want to highlight that, but it was clearly indicated they could do this better. And second, I think it was I think there was doubts on the role of the private-owned enterprises, the POEs. I think trying to reassure private entrepreneurs that they're very much needed and they're very much encouraged to build their business more. The last but not least was the US-China trade war, which had a major psychological impact on the market. But obviously, in the government work report, I don't think they want to openly comment on that particular factor.
Negotiation is going on.
With the good progress made so far, at least that will remove, a lot of overhang as well. So with those three factors addressed, I think this year will be fairly steady.